In this video, learn the news edge trading strategy from a trade made on our desk in Bed Bath & Beyond. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade and the Playbook. In this video, see an experienced trader and me recap how a news edge was developed and then combined with active trading signals to capture a monster trade in BBBY. Let's get to work on sharing these important trading lessons so you can grow your trading account.
We're here to talk about a fundamental trade I did that was a swing trade. Very different, in my opinion, from a lot of the trades we do at SMB, and a little bit more consistent with some of the things I've done historically.
Come on, we're always evolving. We're always adapting.
We're growing, absolutely. And this one worked particularly well. What it was is Bed Bath & Beyond. It's a stock that I've been very involved with, and you guys have heard me talk about for the better part of a year now. And when we were coming into earnings in early January, I started making a lot of noise and talking to all you guys and wanted you to be involved. And that's what we're going to go into in some depth.
I'm glad you did.
Myself as well. The big picture. We've had a very strong bull market, and particularly at the end of last year, coming into January 7th. We'd only seen small pullbacks, and overall there have been some changes. Money was rotating towards small caps with IWM, Russell 2000, outperforming both the Qs and the SPY recently. Bed Bath is a small cap consumer company and was definitely benefiting from some of the changes we've seen. And this is going to become much more important in a few minutes, but heavily shorted stocks had been particularly strong. At the time, people had been pointing to Sophos, which I hope I'm saying that right, which was the largest short-only hedge fund in the world, really paring its commitment to the short book back. And that's what people were talking about at the time. Again, a lot has changed over the last several weeks. But more recently, everyone, I think, on the planet has heard about Wall Street Bets, the Reddit blog that had been targeting heavily shorted stocks, most notably GME. Short interest was absolutely a part of the thesis when I was involved, but it changed fairly dramatically over the 2 to 3 weeks that we were in the trade. Again, we'll go into that in some depth in just a moment. This is the long-term chart of the stock. This goes back about 5 or 6 years, and the real point here is that this had been a much more highly valued stock at around $80. My fundamental understanding of the previous management team was they were just poor. Activists got involved, replaced the entire management team, and you can see kind of pre-COVID it had really picked up a little bit and people are getting optimistic. Then COVID hit it hard and created a really compelling entry point down at $4 back in the spring, which that's a separate trade.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
The trade strategy. My background, I think, is pretty relevant in that I was a buy-side analyst for about 10 years and really looked at this trade fairly differently. I had a lot of information and had studied this for several months, followed it very closely, and had very specific expectations coming into the earnings report. I'd looked very hard at the street expectations, and they brought projections for their same-store sales growth and revenue growth down fairly considerably, based primarily just on some credit card data that got very soft at the end of November. Their quarter ended November, 2 days after Thanksgiving. And this was very relevant in that they are transitioning heavily from an in-store model to a lot more what they call omni-channel, which enables, essentially e-commerce, website ordering and delivery. The key aspect here is that the way they recognize revenue is different. They recognize revenue at the time of delivery. And due to election-related issues, COVID-related issues, everything associated with that, their average delivery time had gone from 5 days to 13 days. This led to, I felt, directly led to the softness in the credit card data. All the transactions that were being done online were not getting recognized for an extra 13 days, while the sales were still occurring. This was a fairly significant point as I was looking at it, and everyone's just focused on this single piece of data that didn't reflect what was actually going on in the stores. So the multiple time frame strategy in the middle here is something that I'm looking at. I'll show the charts in just a moment.
Can I just jump in here quickly?
Yes, please do.
So you made an interesting observation at the beginning that this is a little bit different than what we do, and I want to spell that out. So we stick to stocks that are in play. We find stocks to be in play if they have a news catalyst or if they have a technical catalyst. That is almost all of the type of trading that we do. And I wrote a post last night about how in January 2021, we had our best month in firm history. And one of the top 3 reasons why we did was because we trade the stocks that are in play. We trade the stocks that have elevated volume, that have more volatility to them, that have a catalyst behind them. And so almost always you're going to hear us talk about a news catalyst or a technical catalyst. But what you're doing differently is, and we trade those because that gives us edge. That gives us trading edge. What you're doing is you're finding a different edge. You're finding a news edge. Okay, the edge is you know more about the stock and its price because of your research into this company. We're going to call that a news edge. And that in of itself can become an edge. And so this is new to what we mostly talk about, but it is a very valid way to determine edge.
And I felt it fit very well with exactly what you're talking about. I just anticipated this stock being in play because the information was going to be different than what I'll call the street had in mind. Exactly what you talk about when you say a changing fundamentals story. I thought I could see that in advance. It was a little noisier than I hoped, and we'll talk about that in just a second. But that's almost exactly what played out.
Well, you gave me this idea, and I traded this idea. I'm not exactly sure what you're going to show here, but I know you and I traded this together, and there certainly was a way to understand your news edge and layer on top of that a way to do it as an active trader to control your risk. Meaning you didn't just need to buy it. You didn't just have to buy it because you had a news edge. You could have. That can be a legitimate way to trade. But you could have seen your news edge and then layered on our active trading skills to get in at really good prices and control our risk like we do with other stocks that are in play. Anyway, go ahead.
And I learned a tremendous amount watching you do exactly that. I wanted to be in, and that's where we're going right now.
Well, it's easier when you have somebody feeding you the clear news edge behind it, where the stock really, where you said the stock was going to go up, and it really did go up. So it makes us both look better, I think.
Yes, it worked well. So let me chime in just a little bit on the background, which is that exactly as you say, I've been following this closely for over a year. Some activist shareholders installed a new management team November of last year. I would describe them as absolutely an A-plus caliber team. The CEO is Mark Triton. I always get that wrong. And he was a candidate for the CEO of Target. He left for various reasons, I think largely because he saw more opportunity. It's a lot easier, or more opportunity, I shouldn't say easier. There's a lot more opportunity turning around a $1 billion retailer with $10+ billion in sales than a $75 billion market cap company and just driving a battleship or an aircraft carrier. He brought in a lot more talent and really built out around him. And just from talking to the entire team, it's very impressive. I've done this many times over many years, and you can tell when someone's really dialed in. And I've been very confident in their management team ever since. There was some things that I've never seen before, in that they came out in October, reported very good earnings that were not expected. The stock jumped from 15 to 25 in just a few days. And then they had their analyst day in late October, which was very heavily anticipated, during which they announced a $375 million ASR. That's an accelerated stock repurchase program, which is they're LBOing. They're not even LBOing. They just, from divesting companies, non-core brands and some things, they had cash on the balance sheet. So they're just putting that cash to work, buying back their own stock at about $25 a share. And for reasons that I don't need to go into, basically the shorts drove the stock down back to 18, and they were able to buy all this stock back at 20+% discount to what they had planned to. And that's where the stock was basically trading coming into this next catalyst that I was focused on. That just, to me, seemed like an extraordinary opportunity. And I think you would agree, I was pretty vocal about it coming into this. The morning of, I did want to, so the stock moved a little bit from about 18 to 21 in anticipation in the 2 days before they reported earnings. And I wanted to be long into the number. I could absolutely see a scenario where they reported earnings at 7 a.m. and the stock gapped up $2, $3, $4. So I wanted to have a piece on and did carry that into the number. It was a little confusing the way they reported the earnings, but everything that I was looking for was there. You can see their release here on the right. They were talking, 5% comparable sales growth when the street was looking for 94% digital comparable sales growth. What they really need to show as a turnaround is traction on the sales line. It's a straightforward exercise to lay people off, to cut costs, to clean up the supply chain. And that's great, and they can grow earnings. But what they really need to do to get credibility and to grow the multiple is to show that they can grow on the top line. And you can see from their release here, just a lot of sales growth, particularly for me, 11% comparable sales growth in top 5 destination categories. They are basically rebuilding their brand and saying, these are our core categories. This is what we're going to represent going forward. And in those categories, they're growing comps at double digits. That, to me, as soon as I saw that, I started buying the stock as it was trading down. And the rest of the release was very noisy, and it pulled all the way back from, I think, 2150 to, it got below 18 right at the open. And that's where you and I were getting involved. And yes, so it was trading noisily, but I was making a lot of noise to you saying, this is good.
We both took this into the number and both dealt with it on the day after the release.
Absolutely. And it was a tremendous opportunity, particularly, I'll talk about what you told me is, there was a pre-market break below a fairly significant support level of 18, which is, that's January 7th. You can see right here, the 1750 low that came in pre-market. They came down here and then it it bounced a little bit back up at the open. And then this was the real entry. And you and I were talking, you said, okay, here's our stop. Pushed down, bounced up, and consolidated here. And then very soon, the fundamentals were started to be understood. And it bounced well off this $18 level, which is a very key support level.
Yeah, and I'll use a Dr. Steenbarger term.
Around that 18 level. So we had the stock open up down, it gapped down. And you were saying quite loudly, hey, people just don't understand the story. This story is actually good. People think it's bad. I can even understand that. That's clear analyst talk to me. And then as an intraday trader, I was looking at it and I was noticing value buying. We call that value buying. They just couldn't push the stock below 18. There was a tremendous amount of buying there at 18. I have you in my ear saying, hey, they've gotten this story wrong. I'm looking at the tape and I'm seeing the value buying. If I didn't have you in my ear, and I just saw, and I was trading Bed Bath, and I just saw that value buying at 18, I would have bought it. That is in of itself a good trade. Layer on that the news edge that you're feeding me, makes it a much more powerful trade.
Excellent. I'm working on my reading the tape skills, as we'll see in a moment. I don't even have it in here. That's more because it was a swing trade. But I should go back and record this and look at this part because it was very interesting. What happened over the next 2 days, and it's important to mention that I think we both knew from the start that this was going to be a swing trade. It was going to take a few to several days for this to play out and be understood. And this was actually very healthy. It pushed down in the morning and then just essentially consolidated, did tremendous volume over the day. I can't remember what the R-vol was, but I think it was around 4 or 5. Friday, it cooled off a little bit. And then this is the following Monday, came in at a gap down, opened down only slightly, and then literally was just off to the races for the rest of the day. It drove from 19 to above 20 and held above there. And this is where the rest of the trade really started to come together. This is how we manage the trade. We're backing up, and I want to incorporate the information. The 66% short interest was always very important and something I expected to really play out as the fundamentals were better understood. Let's show. So this is the Monday morning that it started to perform a little bit. I did anticipate a little bit of a pre-earnings run and some covering. This is what happened. So we rode it for about a day and a half. Then coming into 4 o'clock the day before, cut the size down so that we had a manageable size coming into the number because of any potential volatility. Here's where we got involved against the 1752 low. And then
and that's important, Trey. That's really important to point out. So we were in this thing earlier, and then going into the number, you have a trade decision to cut some going into that number because you never know what's going to happen.
Right.
And so very good point to point out we were in it earlier, took some profits, lightened up a little bit, and we're better able to manage the leg down, the gap down on the open.
Yeah, just gave ourselves room to maneuver. And I think that was very helpful. And it's also noticeable to me that it came back almost exactly right to this level where it started the week. Monday, when it took off and I saw this volume, this is where I started to build a little bit extra of a position. And from here on, it was really just riding. This is where, I don't know if you remember, but this is where things got a little difficult. It was a Thursday, I believe. And after hours, Jim Cramer talked it up, I think for the second time. And you'll notice that this is all the way up at $28. We originally were getting involved at 18. That's a heck of a run in a couple of days. But when we saw this gap up and then roll down pre-market and give up all that gain, we were talking. It's like, okay, when do we take profits? When do we take profits? So, and you may want to talk about this as well, just because you were telling me how it was a difficult exit and then you bought some back here. But to me, this was telling it couldn't hold a gap up overnight and came down. And that's where I took some fairly significant profits there.
All right, good. Yeah, and I think that, so you have your swing trade entries at 18, and then it consolidates a little bit. And when it gets above the top of the consolidation, can you just show that other green arrow where you get in, where there's another, so you've got another really good trade decision there to add some more risk or enter a different type of trade above that consolidation. Really clear entry. And then I remember having to take off some risk that day. We were in the money. The momentum was coming out of the trade.
Yes.
And I remember it being 26.50. Is my memory correct?
Yeah, this is you got some off at above 27 as I recall, but yeah, this
I
is
remember
right
on the open selling the first pop because it was gapping down from the overnight, and then I remember below 20. I remember taking some off into a spike above 27, and then taking some more off below 26.50.
Yep, that's this red arrow right here. That's exactly what that is.
Because the momentum's out of it. Because the momentum's it's turning over. It's not acting the way it had done, as you can see previously. There's a bit of a catalyst that could cause it to sell off on this particular day. We're well in the money. We'll take our profits, and another trade will set up.
Exactly correct. And that's what happened. Again, it's Because this was such a dramatic move, the price moves here are a little muted, but this is 28 and change, and it pulled back to 24 and change in just over a day. So I was starting to get back involved here because we had the push down, and then it just got very calm. There's higher time frame support here. 25 I thought was a pretty key level. Came in, I bought a little bit. We had a morning push off, and then started to see some afternoon strength. So these were two buys that I had. And then the following morning, things started to get a little crazy. And this is when the GameStop effect really started to become involved. It had come onto our radar screen. We were talking about it. We didn't know how it might affect Bed Bath because the short interest was about 130 for GameStop versus 66 to 70, depending on exactly how you're looking at it for Bed Bath. It was being discussed at about 1/100th as much, but we started to pay attention to this. And you can see how it really played out. We rode this extraordinarily well, in my opinion. This was a difficult one here where it went up and really kind of collapsed back at the end of the day. And we were talking, it's like, I don't like this close. I don't know if you remember talking to me about that, saying, I don't like that close at all. And then the next day, the next evening, and then the next morning, it just absolutely exploded up into 44. For a long time, had a target of $40, which was somewhat fundamental, but quite frankly, more technical. And speaking personally, when it got to 39.40, I was selling rapidly and aggressively, and taking as much off as I could, viewing that trade as over. I did not think we'd get back from 25 to 40 in just a couple of days, and I was very happy to sell. And it would, 2020 hindsight, that was a great call.
Yeah, I'd say. I actually wrote a tweet today, said to an independent trader seeking advice and noting improved success by taking profits into target. So this is me saying this to an independent trader. And I said, from my seat, this can make all the difference. Developing a system to take profits into target can be the adjustment that dramatically improves performance. This is an example of you taking profits into target, and how doing so can make you more consistent and can really improve your performance, as opposed to holding for the grand slam. You hit a home run, let's take profits into target. We don't have to play for grand slams all the time.
That's absolutely correct, and that's how I was thinking about it, and it really enabled me to maneuver the next couple of days. I was a buyer again down when it got back to 32, and a much different size, but was able to successfully trade that bounce a little bit as well. But I view that as a separate trade. That was, and we're talking about that. This right here is just the generation of the price target. It was a support level from a long time ago. Into 40, I use the histogram. It's something like a volume profile, and there's a low volume node right in the middle of it, right around there. And I just said, this is my target. And particularly when a chart looks like that, I'm like, okay, time to go.
Yeah, and I think that lots of times people look back at their trades and they lament that they didn't hold it for the entire move. And they kick themselves and say, hey, I should have made more. But if you can develop a system where you're consistently making money, and that involves you taking profits into target, and your consistency goes up, I think one of the things that traders don't think about is that that second approach of being more consistent and taking profits into target, that you can trade that bigger. So the solution isn't always to just, hey, let me hold something longer. The solution can be, let me get more consistent so I can trade my system bigger, put on more risk with all of my trades, and that can lead to you making a lot more money. And it's also much less stressful.
I think for me, that's a very key element. If I was moving around and trying to wait for the last, not even pennies, last dollars, I couldn't have had, this is a large trade for me, just being candid. And it worked out extremely well. And in order for me to do the things I had to, exactly, I was like, okay, I have to have my risk really well defined on the downside. And then I have to be taking off aggressively when I meet my targets, because it's going to take more than a couple of minutes. So that was a key decision factor for me. I didn't second guess it, and I felt When it went up to 50, I thought, I was like, that would have been nice, that extra $10. But when it was back in less than half an hour, I was like, okay, I missed, maybe I missed by a few dollars, but I missed by a few minutes, and I just couldn't have been effective in that time frame. So that was very helpful for me. This is just important to mention the volatility. I think it's important to point out exactly what happened here and how crazy things got. This was, the trade we got in and when we got out, and then things still got a little bit crazy. But this is just separate from the trade. And this was GameStop craziness and not core to what we were doing. I just thought it was very interesting and fascinating to watch. This at $48 and then $36 overnight. And some of the intraday moves were just, absolutely crazy. I'm very, very glad to be gone, quite frankly, from this. I did trade it a little bit, but in a very different way. So reading the tape, I don't have reading the tape because it's a swing trade and I thought about it, but I mentioned $18 a couple of times. So this is the earnings release back in October where they first gapped up and had all this. And you can see how well and how strong it was. And this is before you're talking about this. So this is right where it took off 2 days before the earnings release. And then it came back and you said you were seeing value buying at 18. This is, very much a factor in it. And one of the things that I was certainly trading against in terms of what I was just saying about defining risk. Very key aspect of it. Trade evaluation. So the first line I think is very important. It's a bit of a different beast. We're not talking about a scalp and hey, our risk was very defined, but these are the key elements. I came in long only a 20% position, and I did expect a strong report, and I wanted to be involved, what we talked about just a moment ago, and I knew exactly what I was looking for, and this is why I was able to chirp in your ear, and what I saw is it was very noisy. Being very candid, IR did a bad job. There were things I was looking for. It took me 10 or 15 minutes to find. When that's not in the first couple of sentences, it gets very confusing. But the large sell-off, I was able to parse what I needed, and I unquestionably liked what I saw. And I said, this is an opportunity. And we were able to take advantage of it. Down here, they said it was not, they were trying to be conservative. They were trying to set the bar low. I think they overdid it. Then we were dealing with a 3.5 point down gap. That's not fun. It was not fun and not easy, but I think working together was very, very helpful. Your read on value buying and some of the things that you saw and my understanding of the fundamentals, it worked really, really well together.
When you want to be long a stock, you want it to go down. When you want to be short a stock, you want it to go up.
Yes.
It's better for you. Now you may have to adjust the trade you're in presently, but that's good.
Absolutely.
There's too many people that sit there and they think, that's good for us that was lower than it should have been.
Yes.
We were able to get bigger.
Yes.
It was just a temporary mark, our overnight position, and we traded some. I think we traded some from 18 up to 1950 with our day trading skills, and we were able to add to our swing position as well. And so we did some neat stuff with that.
Yeah, it was a very fascinating trade to look for. The only other thing worth mentioning and what I was really worried about in the morning was something that I'd seen, particularly given there was such a large shortage in the stock, and the shorts are active and they absolutely do defend their position. They'll short against the box. They'll go long some stock in a position so they can dump it as a long sale and really try and impact it. I've seen it a number of times where the stock will be trending up, and just in the middle of the day when it's quiet, when there shouldn't be any activity, someone will sell 50,000 at the market and not get 25, 30, 40 cents in a minute. And that happens all the time. I was very concerned about something like that as it was trading down at $18 on some noisy news. Your ability to see all the demand that was there was very helpful. I thought they were going to try and break the chart. They did. They just weren't successful. So overall, trade review, different than what we do. Everything worked out very well in full benefit of hindsight, but much more importantly, I knew what I needed to see. I did see it. I had what I was I knew what I knew. I knew what I didn't know. And the information that was coming through was high quality and it was very consistent with a thesis.
I just want to point out here, Trey, that you did a tremendous amount of work in coming up with this thesis. The thing that I've written about and spoken about and criticized people about for developing a news edge, a quote unquote news edge, is when they literally read one article on Bloomberg and they develop an opinion about whether a stock should go up or down, and they think that that in of itself is worthy of risking money. That is not developing a news edge. You dug in deep into the numbers and into the company and came up with a news edge. And I just want to be clear about that.
Yes. And I think my background is very relevant too. I done this for 20 years. And really, the real thing to understand is 9 times out of 10, there isn't a news edge. You look at it and you say there's something and it's like, okay, changing fundamentals, something beats earnings, stronger revenue, things like that. Yeah, I don't have any edge on that. But this is one where, I felt there was a fundamental misunderstanding of the drivers of the company. And it's a function of a lot of shorts spreading misinformation. And I went and was able to look through it. And again, it was just seeing what I really like to see and understanding it. And I think there's still opportunity in the company. As we pulled back to $25 today, it's like, okay, it was a buy there a couple of weeks ago. The noise needs to settle down, but there's another opportunity. So that was very helpful. And to be able to work with you and watch you trade it in real time was a great learning experience for me. So I hope we can do these again. That was a fun one.
Hey, great job coming up with the idea. I really appreciate it. I owe you a dinner, at least.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.